How's it going, everybody? And welcome back to another episode of Top Buy, Top Sell here in the A1 Edge Finder, where we're going over our number one buy setup and our number one sell setup of the day. Before we get into that, though, I have a brand new Edge Finder feature that I want to show to you, and I think that you're really going to like it. So all of you that are fans of COT data, recently, we have added a COT Data History tab for, this was actually something that's been requested by a lot of people. And this basically goes back over the last year and a half worth of COT data history. We can actually see this data goes all the way back to March 31st, 2023. So that's nearly 2 whole years of COT data that we're taking a look at. And it's this page is showing so much information. So let's just go ahead and get right into it. Starting off up top here, again, like I mentioned, we're looking at nearly 2 years of COT data here. Every single one of these bars represents another week of COT data, and right now I have the US dollar selected. Of course, we have COT data for every single asset that we're tracking in the Edge Finder, but for right now, let's just go over the US dollar. So again, all of these bars represent a new week of COT data. If you're unfamiliar with COT data, it is the commitment of traders data, and it's what big time hedge funds and money managers and the biggest money movers in the market, what are they buying and selling on a week by week basis? So we can see the total number of long contracts open on the US dollar, the total number of short contracts open on the US dollar, and the total long percentage that's giving us on a week by week basis when it comes to these COT traders. And if you select one of the bars, you can break it down even further and just kind of highlight in on that bar, and then you can unclick it to bring back in the full picture. Now, this yellow line here that we see up top is just the long percentage. So as long as we are up above this 50% dotted line, we know that COT traders are favored long on this particular asset. So here is a good example. This was a long stretch of bullishness on the US dollar out of COT traders. We see that it is up here above well above that dotted line, and of course the higher it gets, the more long or the more bullish it is. And anytime it dips below that dotted line, like we can see somewhat recently, it did that in the month of October of this year, so last month, we know that COT traders are favored on the short side of whatever asset that we have selected. So not only that, but the size of these bars matters as well. The bigger the bar size, the more open contracts, both long and short, there are on that particular asset. So this is our largest bar that we see here, and we see a total number of 33,593 long positions open, 33,628 short positions open. So that's 67,000 total contracts open on the US dollar. But if we take a look at one of the smaller bars down here, we see just a total of 17,547 long contracts open and 11,361 short contracts open. So way less than our big bar up here. So that's kind of what we're taking a look at with this top chart up here. Now, if you're familiar with the COT data tab, you know that I always talk about the latest weekly COT filing. I think that this part is so important because on a week by week basis, we can actually see how many long contracts were added or taken away. Same thing with short contracts, how many short contracts were added or taken away. We can see the same thing here with our COT data history, and it goes in order. So you see November 15th, November 8th, November 1st, October, September, August, all the way down to our very first day of data, March 31st, 2023. And we can see the net change percentage on every single week over the past 2 years. The total number of long contracts, the total number of short contracts, and the most important part, whether or not they were adding long contracts, adding short contracts, or taking them away. So if the net change percentage is negative, you know that there was more short contracts added than there were long contracts. And if it is positive, it is the opposite. So for example, in our most recent COT filing, we saw more short contracts added than there were long contracts. But if we look at the COT filing from October 25th, we see the opposite. We see a positive blue number here. So we know that there was more long contracts added than there were short contracts. And of course, again, the total number of long and short percentages here as well. So that's basically how you read the COT data history. Now you don't have to look at just the most recent COT data. You can actually take a look at nearly 2 years worth of COT data for any asset of your choosing. So we are really excited to show that off. But let's go ahead and break down this week's COT data. So here is this week's most up-to-date, most recent COT data, and we don't see too much of a change when it comes to our most 3 shorted assets and our most 3 long assets. We still see the Canadian dollar, the Swiss franc, and the US 10-year Treasury yield bonds as our 3 most shorted assets. The US dollar is a little bit favored on the short side right now at 52%, but still hanging pretty close to 50-50, along with Bitcoin, the Euro, and the S&P. What we do see a change in, though, is our top 3 most long assets. Still the ZAR, or South African Rand. This is still our most long asset, followed by gold. But what used to be silver has now been overtaken by the Japanese stock market, or the Nikkei, sitting at 78.38% long. Taking a look at our latest weekly COT filing, we can see that our biggest changer of the week towards the upside, towards the long side, is in fact the Nikkei, with a total number of 4,227 long contracts added and 1,249 short contracts closed. Overall, the long percentage is 78.38%, and we had a net change percentage of a whopping 19.38%. That is a huge number in terms of net change percentages. We can see the total number of long contracts now open on the Nikkei is close to 10,000, sitting at 9,989, compared to just 2,756 short contracts. On the other side of things, we see the S&P 500 dipping to the low side here on our latest weekly change, with 14,054 long contracts closed and a huge 72,868 short contracts open. That is a massive number of short contracts open, and we see a pretty big net change percentage of negative 7.09. Now you may be wondering, how could the S&P 500 have 72,000 short contracts open, but only a net change percentage of 7, whereas the Nikkei only saw 4,000 long contracts open, but a net change percentage of over 19%. Well, we are comparing this to the total number of contracts open. So you see, with 4,000 long contracts added, with only a total of 9,000 long contracts open, this is going to have a much bigger impact on the total long and short percentage than something like the S&P 500 that has over 300,000 contracts open on either side. So yes, even though 72,000 is a crazy large number, it is not going to have as big of an impact on something that has so many contracts open already. So I hope that makes sense. And if you would like to pause the video to take a closer look at the latest weekly COT filing, feel free to do so, because I am going to go ahead and move on into retail sentiment. Before I do that, though, I do want to mention that right now you can get the Edge Finder that is constantly getting updated, like with our brand new COT Data History tab here. You can get the Edge Finder for 40% off during our Black Friday sale. We are doing Black Friday right now, and with the links down in the description below or on our website, a1trading.com, if you use promo code A1YT at checkout, you can get the Edge Finder 40% off. Not only that, but we have our brand new stock box as well. The stock box is showing off some of the biggest stocks from all around the world and scoring them based on financial scores, trend scores, our 13F scanner score, and insider scores when applicable. Not only that, but we have top sectors as well. So if you are a stock trader, a sectors trader, an ETF trader, this is definitely something that you should take a look at. We do have other videos on the channel breaking down the stock box a little bit more. Go check out last week's top buy, top sell video. I did a more in-depth breakdown on the stock box. Our 13F portfolio tracker here is something that tracks hundreds, literally hundreds of the biggest hedge funds around the world and shows you what they are buying and selling and adding to their portfolios on a quarterly basis. So lots of really useful information in here for stock traders. This is 40% off. The Edge Finder is 40% off. Our Discord alerts, whether it's the VIP Discord or Pulver alerts, all of it 40% off right now on our website. Go check out the description down below. Go check out a1trading.com and use promo code A1YT at checkout for 40% off. Now, okay, let's say I was going to talk about retail sentiment, so let's go ahead and hop back into this, and I'm going to go into major currency pairs. Let's see what people are buying and selling in terms of the US dollar. So, of course, retail sentiment is taking a look at what the overall crowd is doing. What are overall day traders buying and selling right now? We see that right now they are buying the New Zealand dollar, Aussie dollar, Euro dollar, and pound dollar crosses. We can see that they are all up over 60% on the long side right here. And so that is going to be a contrarian signal for us, because there's some crazy statistic that something like 90% or 95% of day traders end up losing money over time in the stock market. So typically, and again, I say typically, whatever the overall crowd is doing, we are looking to do the opposite, which is why retail sentiment can be so important. So again, if it is favored over 60% on the long side, like these four are here, or if it's favored over 60% on the short side, like USD CAD is here, we are looking to do the opposite, or the contrarian signal. So these are bearish indicators for us, and this is actually a bullish indicator for us. Now let's check out minor currency pairs. So we have a big list of pairs favored over 60% here, including Euro CHF, Pound Aussie, Pound CHF, and Euro Pound as well. All of these favored over 60% here, so these are going to be bearish indicators for us. And we see USD ZAR, the Swiss yen, and Aussie NZD favored over 60% on the short side, so these are bullish indicators for us. Now let's finish up with our indices, metals, crypto, and commodities. Recently, these have been really hot commodities in terms of the day trading world. The overall crowd is very, very long on things like Ethereum, platinum, silver, oil, Bitcoin, gold, the UK 100, the DAX, and the Nikkei. All of these things here favored over 60% on the long side. So we are going to give all of these bearish indications here. The Dow, the Nasdaq, and the S&P 500 are all 50-50, too close to call one way or the other. We like to score things when they are up over 60% on either the long side or the bearish side, so that we can, or the long side or the short side, I should say, so that we actually have a clear indication that it is favored, one way or the other. It is clear and obviously favored one way or the other before we score something. Now, we are back in the top setups page, and I'm going to remove any neutral biases that we may have, and this is our full list of bullish and bearish biases for the day. Pretty short list, just 3 bullish biases, just 2 bearish biases, and 1 very bearish bias. So we have 2 clear winners in terms of our top buy and top sell for the day. Aussie NZD has our highest score with a +8, so we'll take a look at that. And USD ZAR has our highest, or our lowest score, rather, I should say, with a score of -9 and a very bearish bias. So typically I start off with the bullish biases, but since we have a very bearish bias today, why don't we start with USD ZAR? So I'm going to go into data scanners here, Forex. I'm going to click our little drop down tab, scroll all the way to the bottom, USD ZAR down here at the bottom with a score of -9. Like I've mentioned, it has a very bearish bias, score of -9. COT data is a score of -2, and retail sentiment a score of +1. Taking a look at that data, we can see that the US dollar, like I mentioned a little bit earlier, the US dollar is favored not really one way or the other. It's pretty 50-50 at the moment, but we did see a negative weekly change from the US dollar. The South African rand, on the other hand, is not only our most long favored asset, but it also had a positive weekly change. So in terms of whether or not we are buying or selling the US dollar against the South African rand right now, COT traders are leaning towards selling the US dollar, and they are really leaning towards buying the South African rand at the moment. So that is giving us our -2 COT data score. Retail sentiment, on the other hand, like I mentioned, is a score of +1. We do just see barely over 60% of day traders right now shorting the USD ZAR pair, and that is giving us our +1 score here. Seasonality is a score of -1, which means that historically speaking, over the last 10 years averaged together in the month of November, USD ZAR does typically trade to the lower side. Our trend reading score right now is a score of -1, and to get a better look at that, we can actually take a look at price forecast and get a look at the daily chart to see how it's been trending. So we have USD ZAR right here towards the top, and we had a huge dip on November 15th a couple days ago from November 14th. This thing absolutely tanked after having a little bit of a trend to the upside. It absolutely tanked. It bounced back, but from yesterday to today has traded just a little bit lower. Price forecast is predicting that it continues to follow that trend. It continues to trade lower here in the days to come. Let's finish up with our fundamental data now. We see GDP, manufacturing, and employment change data at scores of -2. We see unemployment rate and interest rate data at scores of -1. Retail sales are neutral. Services PMI and inflation are both scores of +1. And so, as always, really quickly, just in case you are new to one of these videos, when we are taking a look at our economic growth data, inflation data, or interest rate data, we have it broken up into column A and column B. Column A is going to be our first currency pair listed. So that is going to be the US dollar. The column B is going to be the second currency listed. That will be ZAR. And we just want to know whether or not it missed, beat, or met the forecasted economic expectation. So in this first group here, we have GDP numbers. We can see in the US missed its forecasted GDP numbers. These in South Africa, they beat their forecasted GDP numbers. So a miss here and a beat here is going to end up in a -2 score here. Now, of course, we do have much more detailed fundamental data for all you fundamental traders down here. We have tabs and tabs, pages and pages of backed up fundamental data that goes back for months or sometimes even years, with more in-depth charts and in-depth breakdowns and actual numbers and whatnot for all of the different fundamental data that we're keeping track of. But here in the scanner pages, we're just keeping it short and simple and letting you know whether or not it missed, beat, or met the forecasted expectations, because at the end of the day, that is the most important information rather than what the actual number was. Did it miss the forecast? Did it beat the forecast? Or did it come in right in line with the forecast? So manufacturing PMI, we see the same thing. We see a miss in the US. We see a beat in South Africa. We see the opposite for services PMI. We see a beat in the US and a miss in South Africa. Both the US and South Africa beat their retail sales expectations. Inflation data in the US, we see it was forecasted at 2.6%, and that's how it came out. But in South Africa, we actually saw it tick a little bit lower, forecasted at 3.9%, but came out at 3.8%. Lastly, our unemployment change in the US was forecasted at 4.1%, and it did in fact come out at 4.1%. In South Africa, however, it was forecasted at 33.5%. It came out a little bit lower, down to 32.1%. So there we go. There is all of the data and numbers backing up that very bearish bias -9 score on USD ZAR. The other pair that we said that we're going to take a look at is Aussie NZD with a solid bullish bias score of +8. COT data is a score of +2, and retail sentiment a score of +1. So taking a look at that COT data, we can see that COT traders are favored on the long side on the Australian dollar, 60.85%, and they are also favored on the short side for the New Zealand dollar, 60.16%. Not only that, but the weekly change for Australia was positive and the weekly change for New Zealand was negative. So strong looking COT indications there. Retail sales retail positioning, 83% of retail traders right now are shorting Aussie NZD. That is a big number, and that is a +1 score for us there. Seasonality, however, is a score of -1, which means over the last 10 years averaged together, the month of November is typically a bearish month for Aussie NZD. The trend reading, however, is a score of +2, and again, going into the price forecast tab, we can actually get a better look at that daily chart. I'm going to search AUD NZD. There we go. And here we are. So we saw a huge move to the upside earlier in the month of November, but then they gave back all of those gains. But since then, we have seen this thing climb a little bit higher, drop just a bit. But from yesterday to today, we are back up at recent highs over the past week. Price forecast is predicting that it will continue to move higher over the next couple of days. Finishing up with our fundamental data, we see that GDP numbers and inflation numbers are scores of -1. Manufacturing and employment change numbers are scores of +2. Services PMI and unemployment rate are scores of +1. Retail sales and interest rates are 0 or neutral scores. So a little bit all over the place, but overall slightly favored to the bullish side when it comes to our fundamental data. Again, our A column here is going to be our first currency pair listed, so that will be Australia. The B column here will be the second currency pair listed, so that will be New Zealand. And we see that GDP numbers were met in Australia, but beat in New Zealand, so that is a -1 score. They were manufacturing PMI was beat in Australia and a miss in New Zealand, so that is a +2 score. Services PMI, again, beat in Australia, met in New Zealand, +1 score. Both Australia and New Zealand missed on their retail sales numbers. CPI forecast in Australia was forecasted at 2.9%. It ticked a little bit lower down to 2.8%. In New Zealand, however, it came out as forecasted at 2.2%. The employment change in Australia was forecasted at 0.43%, but it actually came out at 0.11%. That was a miss by 0.32%. In New Zealand, it was forecasted at 0.4%, but came out at -0.5%. That was a miss by almost 1% here. The unemployment rate in Australia, forecasted at 4.1%, did in fact come out at 4.1%. In New Zealand, however, it was forecasted at 4.6% and ticked higher up to 4.8%. So there we go. There is all of the data and numbers backing up that +8 score bullish bias on Aussie NZD. I want to remind you guys one more time that the Black Friday sale is happening now. So if you are interested in getting the Edge Finder for 40% off, the stock box for 40% off, or any of our Discord services 40% off, you can do so right now with the links down in the description below or on our website a1trading.com. And don't forget to use promo code A1YT at checkout to claim that 40% discount. Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.